Hey, I'm 25 and invested, and I have had a rough time in the markets lately. I believe that every one of us has had a rough time in the markets, at least most of us, not every one of us. Of course, there is going to be the few people who are doing well at a time like this, but I am not. I've had a few portfolio changes. It's a monthly update. What we're going to cover today, we're going to start with my wife's account, my account. We're going to go over comparisons between SPY, Xeqt, and QQQ. I think it's important for us to compare ourselves on a monthly basis against the benchmark. And I am doing okay. It's been a rough month. It's been a rough month for most of us. I'm gonna make myself a little bigger here. It's been a rough month for most of us. You know, that's just how it is in investing. It's not up all the time and it's not down all the time. It goes up and down in cycles. So, bearing that in mind, the idea is to stay invested for as long as we can. This month, we had tax season, and tax season actually saved the day in our account. So, you'll notice that this account is the same value as it was last month. So, why make an update? Well, that is because I have added $7,500 to this account and it has gone nowhere in a month. That is a tough pill to swallow. It is pretty average. Talking to my wife about how investing works and how just because we put money in doesn't mean that that money is going to start growing right away. When we are investing in a downtime such as this, it is quite common that we will add money and then it'll be down that same money in a week. And you go nowhere. And it feels pretty tough to do that. It feels hard to stay the course when times are bad and when your money is disappearing as you put it in the account. I think those are the times that it is the most important to stick to a plan that you have well thought out and that you have decided that you could do through times like this. A good plan succeeds in times like this. So let's go take a look at how my plan has been. I've made a few sells. I plan on selling a few stocks in my Tfsa. I haven't sold anything in my Tfsa yet, but there have been some changes in the deep value account, and the deep value account is doing pretty well. That account is, I don't believe, up on the month, but they're doing well. All right, so I'm going to make myself small again. There you go. And we're going to start with my wife's account. Where are they? There they are. And my wife's account has been up. Actually, wrong. Down. Her account is down 4% on the month, which is, again, she sees it. I see it. We actually have one of her accounts in the negatives. That is the First Home Savings account is 3.08% down, which is pretty crazy in considering that every time we've added money, we've been up almost instantly. It's fun to see something that is down instantly. So this First Home Savings account is very new. This is something that we finished maxing out this year, this month. Not this year, of course, this year. And this month, yeah, it's been going all right. This is all Xeqt, as you guys probably know. Her account is all Xeqt all the time. So that is her account. It is down on the month. Damn. And now we look at Xeqt. This is just a chart of Xeqt. I'm not actually going to go into my side yet. Take me 1 minute. Yeah. Xeqt is down. And we're going to keep this as a comparison to my account. SPY is also down more than Xeqt, which is pretty crazy. I believe that right now Xeqt has the lead on the year. Maybe not over the next 5, but with so much uncertainty between Canada and America, it's very cool to see how one that owns both is performing over one that owns just America. And then QQQ, which I always use to benchmark myself because I have a very tech-heavy Tfsa. So I think it's important to benchmark yourself to the opponent who's closest to you as well. So even though I am mostly Xeqt, anytime I do invest regular money, it has gone into a very tech-centric investing style. So that is, these are the 3 monthly, as you can see, monthly These are the 3 monthly, you know, performances of the indices that I'm going to compare myself to. And as you can see, on the 1 month, I'm down 5%. So I did not beat Xeqt. I did not beat, I believe, yeah, I just beat SPY and I beat the NASDAQ over the month. And now this is a very volatile month. And we're not going to beat all the indices every month. Of course not. And I'm not going to get the average of Xeqt either, because even though it's a large portion of my portfolio, the rest of my portfolio is quite volatile. So out of the month of which we've added $5,500 to my Tfsa, all that's gone. We are $6,800 down this month in my account. So that is not including my wife's account. That is just my account. I believe it's more like $7,000, $8,000 when you add both accounts together. It is turning into quite a large sum of money. So we are down on the month. On the 3 months, we're also down 5,000. Not as bad. And 6 months, we're in the positives by 4%. Year to date, though, this account is down 2.50%. So it has been a pretty, I'd say, a rough year to date. I'm not really sold on that. I did already go through a year where I was down, 12% coming out of it. That is in my, let's see here, go to my all-time, that right here. That has happened before. I have been down before. So these things, it's just how the market goes. You can see the ups and downs through the market. That's the price we pay to play the game. My Tfsa, we'll start with my Tfsa. It is the biggest. On the past 1 month, it is down 5.11%. I do have $12 on the side, and I have added $5,500 to this account. So the account has grown. However, it is also down $6,000. So a net negative on the month. I put money in and it is gone, which, yeah, you gotta drill that home that these things are going to happen sometimes. I'll keep saying it. It makes it real. These are all the stocks that I hold. Algonquin Power is the worst performing stock. It is also one that I'm planning on trimming. Alibaba has done fairly well during these times, which is pretty crazy. And Bank of Nova Scotia has come back down to a reasonable, almost flat. Berkshire Hathaway has been killing it, which is, yeah, I would have put more money in. You never know the future, Damn. Dollar General is one of my least performing stocks. I guess it's kind of a race for who can stay stagnant at 30%. Dollar General and Intel have kind of just performed the same. Dollarama has taken a slight dip. However, I'm still up 182%. And Meta has taken the biggest drop in my portfolio, coming down under 200%. So the gain in Meta has come down to, I was up almost 300% on this position. It is now down under 200%. So a 100% swing. No, it's 205%. My bad. So I'm just over 200%. So I've lost, 75% of the value there. Not 75% total, but 75% of a gain. However you want to work that math out. Manulife Financial is not up over 100% anymore, which is super unfortunate. MO is still kicking and Microsoft still kicking. I see a few people who I follow buying Microsoft. I'm not going to be on that train. NEWT is another company who I'm thinking about getting rid of in this account. If I'm going to sell these stocks in this account, I'm likely just going to turn it into Xeqt and sit on it. I do have my non-registered deep value account where I'm actually making more active bets. However, it is a much smaller portion of my portfolio. So I'm only really playing around. I guess I'm playing around with about 15% of my portfolio now. And all the money we've been adding has gone straight into Xeqt for the past year and a bit, which is why I think monthly updates are more appropriate because, if you have less skin in the game overall, then there's less to show, right? Even though I still do my active side, I still have less to show. So, yeah, there you go. Xeqt up 16% in my portfolio. Walmart down under 100% as well, which means that I don't have a lot of stocks that are up over 100%. I only have the 2 now instead of the 4. So my stocks up over 100% have been cut in half, which is damn. Yeah. Other than that, we're going to go to my first home savings, which is the boring account. And the boring account is down 4.10% on the month. Damn. Just the same as ever. I'm up 3% on Xeqt, and all time this account is up 5.09%. It's times like this where maybe I could have kept this account in cash, but it's just not worth it. It's worth it to not time it. You know what I mean? Like, it's worth it to say, hey, like, maybe the dividends aren't what I need. Let's just throw it in an ETF and then just sit and hold. That seems more reasonable over 10 years than it is to say, let's hold cash for 2 years, wait for a drop. You're playing with your own brain there, right? Everybody's different. That's the route that I've chose, and I need to stick to that plan because that's the plan. If you start experimenting halfway through a plan, you'll never know what worked. Yeah. And then we got our deep value non-registered account. Now I'm going to go to the bottom first and show you that I sold Vail and I sold PUK. They have been taken off of the acquirers multiple stock list. And I've added PBR and SYF. They have been added to the acquirers multiple stock list. And I always pick from the bottom, so the most, I guess, the greatest chance. However, we are immediately taking a 5% dip here and a 1.5% dip there. So Friday has been rough. I did capitalize on gains from both Vail and PUK, up 30% and up 11% respectively. Now I did have to pay, a fee to trade, right? So I did lose money there as well. You got to stay on top of that, but 11% and 30%, even if you take a percent off of those, that's still pretty respectable. And yeah, I have a plan. I'm sticking to it. Every time this hits $200, I'm adding a new stock from that list until the list my stocks hit 20. When I have 20 of these stocks, it's $4,000. I will start just investing more money into each position. So I'll have to rebalance from there. It'll be equal weighted almost the whole time, and then I will continually adjust how it's all gonna look. It's gonna take a lot of doing. This one's gonna take a lot more work, and I'm actually up 9% there too. This one's gonna take a lot more work than the non-registered are my Tfsa. That is because this is going to be more actively traded, and this is going to be on a 3-month basis. So overall, in the past month, this account is up 4.51%. It is in the positives, which is pretty crazy. And I did take gains there. So yeah, it's going to be a lot of work, and I'm going to be actively managing a portfolio, and we're going to see how it goes. I'm going to be trying this time too. Like I do look at a few lists, and I do decide what stocks are going to make it. It's not just the acquirers multiple. It's also the little book that beats the market. So I compare stock valuations that they have based on formulas that they've made. And then we create a thesis on my channel where we decide, okay, we're going to be still select, even though we're not just picking randoms off the list, we're still being selective. So yeah, it's going to be fun. It's going to be different. And I'm going to enjoy myself as I do. Yeah. So I'm going to make myself big again because these are the closing seconds of the video. It's tough. It's a tough market right now. We have to be prepared for stuff like this. It's not all sunshine and rainbows in investing. That's clear, and it'll continue to be more clear as I get older. If we do suffer major down draws, it is important for me and my wife to continue to add money. That's it. We have to work hard. My wife and I are in positions where we have jobs and we're always able to work. We work hard. We become invaluable in the industries that we're in, which is exactly what you should be trying to do during times like this. During times of uncertainty, you need to have a confident plan and a confident value in yourself. So, yeah, thank you guys for watching. And I hope that you guys take at least something out of this. And I hope that next month is a little better for you. Have a good day. Bye now.